JB here. Hope everyone's doing outstanding. Monday, March 31st, 2025. This last trading day of March, last trading day of the first quarter. S&P futures down about 1%, or actually down 0.9% now. Off the lows of the morning, about 7:30. SPY was all the way down to 548.70, which would be the lows for the year. Has since bounced. And wow, I mean, just read the headlines. You thought there'd be a Black Monday today, right? A huge gap down. Maybe we get a halt, right? We haven't had a halt in quite some time. It just feels like peak fear to me, right? I mean, you can create a script of a recession and the market tumbling going into bear market, and it's very easy with all the data points that are coming out, right? And then the uncertainty with what's going to go on with tariffs. How's that all look like? And here it is. And you would, I mean, I look at the market, I'm like, to me, it feels resilient, right? And I mean, that's just my opinion. Other folks out there think it's on the cusp of just collapsing. You take a look at the VIX, which was up all the way up near 2450 before it's down here at 2395. It almost looks like it doesn't take much for it to reverse. I almost look like the VIX, similar to what happened in September, October, like it's broken, right? But I guess time will tell. Big week. So, you have Liberation Day on Wednesday, where there's going to be more details and clarity around the tariffs, and those will take effect. Sometimes clarity is a good thing, right? Uncertainty, not a good thing. So once there is clarity, then it's what does that all look like? What are the financial ramifications between the different countries? So we'll see how this all plays out. I tend to be an optimistic person, right? So, I look glass half full. I think there's opportunity for surprise, maybe some squeeze. If you've traded long enough, back in 2008, 2009, you got scarred, right? The markets just got destroyed. I remember in the midst of it, even September, I'm like, oh, there's no way the market would keep going down, and then it just kept going. Some of these names that were, I mean, Citigroup, I remember was like $30, $40, then 20, then 10, and also all the next thing you know, it's $2, right? I don't think we're in that scenario, but because of 2008, 2009, it took a long time for me to be at least be optimistic on names, right? Every time you get a call position, you'll be ready to your finger on the sell trigger because you think, okay, we're not done. We're not done. We're not out of the woods yet. So with that being said, you translate that to where we are now. And to me, it's like I'm on the flip side of some of these other folks who it's very easy to get feared into thinking that we're in the midst of another crisis like that. And one of these years and months and weeks, we will be, right? But this narrative, it's happened over and over again. I mean, there was a Eurozone debt crisis in 2011, 12. I remember there used to be fires in Greece, riots, protests. Greece was going to default. They were all mad at Germany because they were the biggest country in the Euro. They were charging high debt, rates to protect Greece. I mean, I can go on and on about all these. 2015 in August, we had the big crash that had a halt because of China. I mean, you can go on out, but then sure enough, fast forward and the markets are higher. I'm not saying this is the time, but sometimes amidst all these crazy, like the headlines, just crazy with all the stuff. I was talking about the FHA loans being a high delinquency rate. That supposedly foretells a recession is coming. Goldman Spectacular overnight ratcheting up their probability of a possible recession up to 35%. Stagflation, right? That's the new buzzword that's been floating around. Maybe this all comes to fruition, right? But I keep saying, nope, I don't have my bull horns on, don't have my bear horns on. But now that we're near lows and support, I'm back to being possibility of playing some bounce plays. So I don't know how today plays out. I mean, I thought maybe it seems like it's too easy to trade right down to 540 on the SPY. It seems like that's what everyone's playing for. And when that happens, usually the market it does the reverse, right? It tries to shake the most people, and I think most people are thinking we're headed lower. So maybe we are. I just think there's more bounce opportunities. With that being said, I'm going to continue to keep things small as I've been doing, playing both sides, and look for some names that I think might have some opportunities. So take a look at the S&P. I mean, we're down 2% on Friday. 540 is a big spot for me. So, if we can't hold 540, if there was some crazy weakness today or continuation from the gap this morning, and we get to 540, then, I might get my bear suit on, right? And if that's the case, I'll be getting ETF. So I talked about last week, in lieu of trying to play some high premium strikes, because a lot of these individual names have high premiums, I'll probably do some bear ETFs, SQQQ, the TZAs, where I can just do an index and instead of trying to time some of these names. That's kind of where we're at, but I don't know if we're going to get there. but that's kind of the game plan. So for me, just watching that. On the flip side, we have a bear flag. So want to see the SPY back over 558 this week. If we can't break that, that bear flag's probably confirmed. And then that means so we go 610 down to 550. So you have another 30 points to the downside on a SPY. So that breaks to 540 down to 520. 490 is the bear market. So lots of little things at play, but important, especially if we do get a quick move today at the open. I want to know those areas of support. So 540 is big for me. And then I keep talking about this VIX, and you just pull that picture out. I mean, does this scream that that the market's still on the cusp of a huge sell-off? Like, it seems like we're peak fear, but the VIX doesn't say peak fear to me. So anyway, that's that. Other little things to know. I always trying to find charts. Well, first I like quotes. Maybe I'll start doing that at the start of every trade. But I love charts. And if you take a look at this, and I always try and find. I always used to talk about the internet being the most disinflationary invention of our lifetime, right? It created efficiencies that took out product costs, service costs. So that in itself reduced inflation. And then you have China. And China wasn't a monster at the start of 2000. But these are the amount of goods imported from China, and they're low cost goods, right? And all that does is push down prices. So what is the next import monster? Is it going to be India? Is it Southeast Asia? Is it so? I think that a lot of people look at the inflation as a function of some other things, the tariffs and what have you. But to me, some of the inflation that would or lack of it over the decades has been some low cost goods being imported. But that's a larger theme. Obviously, we're dealing with more microeconomic things than macro. But I always like to see those charts. I'm like, all right. So rants for other days, and then some other things here too. So one other chart. This is from the Wall Street Journal this morning, just showing the kind of the basket of stocks that do well. So if we do have stagnation, which is falling growth and rising inflation, momentum names get destroyed, right? And you can see the performance during those time frames, 10, 15, 20% to the downside. Stocks that aren't really momentum, kind of equal weight, not growth names, not hugely dividend value names, but kind of in the middle, those still get a hit. And then the high dividend value names do well in stagflation environments. So something to keep in the back of your head. All right, so now individual names. So last week, I talked about these ETF. SQQQ will probably be one of them. You look back in August, it was over $50. So again, if we do get some follow through here at the open, maybe a name I'll be looking to get some hedge calls on because those are bearish ETFs, 3-time bear there. And the thing with these bear ETFs, there's rebalancing at the end of the day. So if you went and just invested in SQQQ as an investment, it rebalances. There's erosion every day. So at some point, it's going to be back to level. Even if the market goes down, it eventually will be back lower than where it started, unless there's some huge swing. That's just how they trade. So it's like a short-term trade for a hedge, right? It's not a long-term, hey, this is an investment. Unless you think the market's going to zero, then it's a great investment. The SQQ and then TZA. And TZA, you look back, it was $19 back in August. So those are less expensive, a risk reward basis to trade those. But you take a look at the IWM was under $200. So yeah, be a little careful on that one. So those are the two names I'll be looking for some possible call hedges, because those would be, put hedges and there'd be calls, because obviously they go up as the market goes down. All right, so now just individual names. I keep talking about GameStop, and you had Marathon announcing $2 billion raised to join GameStop and Strategy as a Bitcoin reserve asset company. I still love GameStop here. You had Wedbush out this morning ratcheting up their price target to $13.50 from $11.50. I don't think that means much. But again, I always look, I keep saying, I think Ryan Cohen's a great steward for the cash hoard that GameStop has. They're the most fundamentally sound company to be able to do this. And I think it trades to $40 in the coming weeks and months. So I'll wait for it to settle a little bit, and then I'm going to look for some more strikes to play for that move. And then other names, I might get some spec calls on here this week if I think the market's going to bounce as we get more clarity on tariffs on Wednesday. Dell, obviously, I still have some strikes this week, needs some help, but if it can hold here, 88's the lows from earlier in March, that could be a nice play. Netflix. You see a lot of news and headlines the last couple days in regards to some of their content and getting some rave reviews and streams and things like that. It has to be a boom for their business. Trade under 50-day moving average on Friday. Big reversal. I think a lot of it obviously had to do with the market, but if a name that probably is not going to have much impact, regardless of what the tariff situation comes out, I think this trades up back near over $1,000. The thing is, it closed at 929 or not. What did it close? 933, and the $1,000 weekly strikes are over $1. So the risk reward there is tough. But I'll see if I can find a decent strike. I'll add some, whether it be today, tomorrow, Wednesday. Roku, I'm still barking up the same tree here with Roku, but $200. I mean, the 200-day moving average $72. So don't be surprised if we get some speckles. Again, to me, another name, now that the hardware component that's out of their business, where they have to worry about getting, tariffs from China impacting selling TVs and their platform. Now that's kind of out of the way. I think it's somewhat of a name that's kind of immune to the tariffs somewhat. And then some other names that have a little tariff impact, but have really been oversold. I mean, I keep looking at Shopify. I'll continue to look for Shopify calls there. And Wayfair, I think, trades over $40 if the market finds footing. And that's it. If things get crazy by the noon hour or 11:30, I'll be back on audio. But I mean, the easiest time to get panicked is when you see all these headlines. And some of these folks I've seen over the years, they just go all in on puts. And maybe one day it will work, right? I mean, all these headwinds over the years. God, I remember the flash crash. I was 2011. You're sitting there. I had Apple puts. And I think Apple was 400. It was like a couple splits ago. And my puts at one point were up like thousands of percent, but I couldn't close them because markets were crazy then. And then I'm like, over the next couple of months, how can you trust a market that lost trillions of dollars in valuation because someone hit a fat finger? And all these events over the years, you kind of understand that, sometimes it's easy to get feared, but then at the same token, I mean, the market's going to bounce at some point. So anyway, let's have a great day, folks. I'll be back. Rock and roll.